Okay, welcome back. Till now, we are in our module 1, that is our chapter 1, interest rates and rates of return, interest and rates of return. Till the last day of our class, we have discussed certain things. We have discussed geometric mean, we have discussed HPR, we have discussed multiple rates. Okay, now we are going to the next important part of this particular module, that is your portfolio return measures. What all portfolio measures we are going to discuss is, first one is money weighted rate of return and the second one will be time weighted rate of return. So two things are there. First one is what, the money weighted, and the second one is time weighted. In money weighted, it applies for the concept of internal rate of return into our investment portfolios. What all portfolios we can have? We can have multiple portfolios, right? We can invest in gold, we can invest in stock, we can invest in land, we can invest in multiple portfolios. That is possible for us. So what happens in money weighted rate of return? We assign internal rate of return to investment portfolios. So first of all, we need to know what is this internal rate of return. That is more important. So internal rate of return is nothing but the rate of return or the discount rate at which the present value of inflow is equal to present value of our outflow. So basically our net present value is equal to 0. At which position? At internal rate of return we are considering. Yes, please come. At internal rate of return, net present value is equal to what? Is equal to 0. Now, first of all, what is net present value? Net present value, NPV, is nothing but inflow minus outflow. What inflow minus outflow? It is nothing but present value of cash inflow minus present value of cash outflow. That is the basic meaning of net present value. Now, if you take that net present value is equal to 0, we can say that NPV is nothing but inflow minus outflow, which will become what? The net present value of inflow will be equal to present value of outflow. So that is the basic understanding of what? Internal rate of return. Now we have a formula for net present value. You can write it in multiple ways. So net NPV is what? NPV, usually we will write it as cash outflow we can take plus cash inflow for the first year. How will you write cash inflow for the first year? Cash inflow for the first year. So let this be what? The CFO. I am taking it as cash outflow, whatever we have taken. Okay, cash outflow, usually the initial investment, whatever we are putting. Then what is for the first year? After 1 year, what will be our inflow? We will usually take it as what? The 1 plus internal rate of return, the whole raised to 1, plus cash flow for the second year divided by 1 plus internal rate of return, the whole square, plus etc. etc. That is the usual way of writing NPV. Now you might think, sir, everywhere plus sign is there, inflow and outflow, it should be opposite, right? When we take the value, we will assume that inflow is taken as positive and outflow is taken as negative. That anyway we will do it in calculator. Understood the method? Understood the basics? What is internal rate of return? Net present value is equal to what? 0. Sheikh, you got it? Understood, Sheikh? Good afternoon. Are you getting it? Please type or yes, perfect. Good. Now, first of all, I'll take you to one question. Can I take you to one random question in order to understand what is this internal rate of return? I'll take you through one question which was given in the module itself. I'll give you the question. 1 second. Yes. Make a note of it. Consider an initial investment of how much? Let it be $15,000 or $150,000. Okay. Estimated cash flow for the following 3 years years from this investments are $50,000, then $100,000 and $40,000, okay, respectively. What is the internal rate of return is the question. Okay, so what all things are given in the question? Few things are given in the question. One second, I'll just align the question upside so that it will be much easy to understand. Okay, yes, that is the question. So what all things are given? Consider an initial investment of $150,000, or we can say that $150,000, that is given. So that is the initial investment. Is it inflow or outflow? We are investing, is it inflow or outflow? Please tell me. It is an outflow, correct? This one is an outflow because the investment we are making, correct? Yes, make that over there, write that over there. Then estimated cash flow for the first 3 years or the following 3 years from the investment are $50,000. That means cash flow for the first year is how much? $50,000. Okay, $50,000. Then cash flow for the second year is how much? That is nothing but $100,000 or $1 lakh. Okay, then cash flow for the third year is how much? $40,000. Okay, these all things are given. Then we need to find the value of IRR or internal rate of return is the question. Okay, we can easily find it using our calculator. I'll tell you how to use calculator for finding this. Okay, we will clear everything. First step, yes, please come in. Yeah, a little late, we just started off. Okay, yes, please come in. I'll just revise. One more person is there, so I'll just revise everything and I'll come to this question. Fine with that? Yes. So we were discussing money weighted return, that is MWRR, we will call it as, and money weight of return is usually spoken with respect to internal rate of return. Now coming with what is internal rate of return? Internal rate of return is the place where the net present value is equal to 0. First of all, what is net present value? Net present value is nothing but inflow PV, that means present value of inflow minus present value of outflow is nothing but NPV. So what is internal rate of return? It is the discount rate at which NPV is equal to what? 0. So we can say that inflow is equal to outflow at what position? Inflow is equal to outflow at our IRR. So that was the thing we discussed. Now coming to the first question. First question is, they are telling the initial investment is how much? $150,000. Okay, then estimated cash flow for the following 3 years from the investment. For the first year, cash inflow is how much now? That is 50,000. For the second year, it is 100,000, and for the third year, it is 40,000, not 4,000, 40,000. Okay, now we need to estimate IRR. Okay, can we try using our calculator? Everyone, are you ready? Yes. Yes, continuation. We are just continuing from the previous topic. Now, on your calculator, when you clear your, when you clear everything on your calculator phase, clear off everything, it will be 0. Now, after that, have you seen something called as cash flow? It's mentioned CF on your calculator. Is it there? On top of your second row, there is right next to the second button, there is something called as what? CF. Click that CF. Okay, first step, click CF button. So that is where we are going to find questions based on cash flows. Okay, click what? CF button. That is the first step. Then sometimes on your calculator, some values will already be there. If you had solved questions previously based on this, there will be some values. So if there is some values, we need to clear that, right? We need to clear the entire values. So click clear. How to clear the? We will click second button, then click what? Clear button. Okay, second button, clear button. Second, then click CE or C button. Okay, that means our everything is cleared, correct? Yes, all the work is cleared when we click clear work. Okay, click second button, then click CEC. Now I want to ask, when you click CF button, is this the view everyone is getting? CF is equal to 0. Everyone is getting the same thing. If not, what will you do? If some value is already there, what will you do? Click second button, then clear the work. Then the entire thing will be cleared off. That is the first step. Now, you see something called as CF0. On your calculator, CF0 is there now. Okay, what do you think that CF0 will be? That CF0 is nothing but our initial investment, whatever we are putting. So how much are we putting down? We are putting there how much? 150,000, right? So whenever we are dealing with questions, instead of putting all the zeros, you can just put it as 150. Assume that it is 150,000. So you will type 150. Then you can click what? The enter. Okay, if you want to change the sign plus or minus, that is also fine. Since it is taken as what? The outflow, you can change the sign. First you can change the sign, that will be better. Click plus or minus, then click what? Enter. Click enter. Okay, done. So have you seen this now? CFO is equal to minus 150 on your calculator. Everyone is having that now, right? Yes. Are you getting the same thing now? Yes. Next, what will be the next step? There is up and down arrow, right? Have you seen up and down arrow on top of it? That means just click up or down. You click down first of all. You just check down. So CO0 is coming into the picture. C01 is coming into the picture. C01 is the whatever value we are getting in the first year. How much we are getting in the first year? We are getting 50,000. Will we put all the zeros? No, we will just put type 50. Then click what? Enter. Type 50. Then click what value? Enter. Okay, that means C01 is equal to how much on your calculator now? That is equal to how much? That is equal to 50 on your calculator. Now again click down arrow. Down arrow. Now you will see F01. F01 means what? That is the period. What is the year? Only 1 year it is happening, right? For the first year, if you check 1,50,000 was invested. Then you got how much? 50 in the first year. So how much is the time period? 1. So anyway, it is given as 1 directly. You can click enter and you can move again down. Enter, or I'll write type 1. Then click what? Enter. Then again move down. Now you will see C02. Are you seeing C02 on your calculator, everyone? C02. What do you think that C0 is? C02 is. That is the cash inflow for the next year. That is cash inflow. How much is that? Cash inflow is how much? Please. Cash inflow is how much? That is 100,000. So type 100. People, type 100. We will not put all the zeros. Okay. Type 100. Then click what? Then click enter. Everyone type 100. Then click what? Enter. That much is done. Then move down. You will see F02. F02 is how much period? It is becoming in 100 only, right? That means it's same thing. 1 year. Okay. Again 1 year gap is there. So type 1 at F01 and click what? Enter. Okay. Now, any more cash flow is there? Yes, one more cash flow is there. How much is the last cash flow? That is 40,000. Again move down. Then C03 is there, right? On your calculator. On C03 type how much? 40,000 means how much you will write down? You will just put 40 over there. Okay. 40 over there you will put and click what? Click enter. Okay. Click what? 40. Then click enter. Okay. Done. Then move down. You will see F0. That is already given as 1. Click what? Enter. Type 1. I'll just mention type 1 because this is the first time we are doing a question based on cash flow. That's why. Otherwise, going forward, we will not do that. If the cash flow is 3 or 4, we will change it. Okay. Now you type enter. Okay. Now we clicked all the values. Whatever value we require, we clicked over here. Correct? Yes. Now, what is the question? They are asking us to find internal rate of return. People, have you seen something called as internal rate of return or IRR button on your calculator? Have you seen IRR button on your calculator? Yes. Right next to NPV, there is an IRR button. Click IRR button, then click compute. Okay. Order, click IRR button. Click IRR button. Click what? Click compute. So how much are you getting? 13.11. Correct? Yes. Understood the method. Everyone, can I repeat it again? Yes. So anyway, one person was late, so I'll just repeat it again for you. Sheikh, you got the answer. You are having the calculator, I remember. You got the answer. If not, also tell me, I'll repeat it. Yes, perfect. So we were discussing money weighted return because I'm taking more time in this concept because this is the base. Going forward, we will just use this base for all the other calculations and all. So it is the single part we are taking as the base. So money weighted return we are discussing. In money weighted return, there is what we are mainly dealing with. We are dealing with the concept of internal rate of return to our investment portfolios. Then what is internal rate of return? In internal rate of return, the net present value is equal to what? 0. Net present value. You are aware about net present value, da? Naren, you are aware about it? Net present value? No. Net present value is nothing but our total present value inflow will be there. Minus outflow will be there. If you reduce that, you will get the net present value. Okay. Now, in internal rate of return, what are we dealing with? In internal rate of return, we are dealing with our IRR. Okay. What is IRR? We are dealing with wherever NPV is equal to 0. NPV is equal to 0 because is A minus B is equal to 0, then A is equal to B, right? Then we know that NPV is nothing but inflow of PV. PV inflow minus PV outflow. That means if NPV is equal to 0, inflow should be equal to what? Outflow. Present value of inflow is equal to present value of outflow. So this is the usual formula of an NPV. Okay. So this can be taken as outflow plus for the first year there is an inflow and a rate is there. For the second year there is an inflow and a rate is there, etc., etc. Now there is a question. In order to understand how to find IRR, I gave you one question. Look at this question. Consider the initial investment is $1,500. What do you mean by initial investment? That is something we are spending, right? So it should be called as what? Outflow. Okay. Then estimated cash flow for the following 3 years from the investment is, first year I got 50,000, second year I got 100,000, third year I got 40,000. Respectively. What is IRR is the question. So inflow for the first year is given, inflow for the second year is given, inflow for the third year is given. Now you got the calculator, or how is it done? You have calculator? Is it? Okay, fine. So in our calculator, there is a button on your calculator. You can use this calculator. Yes, you can use that calculator. Along with me, you try to do the question. Okay. So clear everything. So how to clear the work? See button, you clear everything. Then click. Have you seen a button called as CF, cash flow? CF. Next to second, there is CF. That means CF button is nothing but with respect to cash flow. Whatever cash flow is there, we can find using that button. Now, click that cash flow button. Okay. What are you seeing there now? CFO is given as minus 150, maybe because you have already typed it. So we will clear everything. Click second and clear. Click. So check the first step. Click CF. Then click second. Then click clear. That means everything is cleared. Now 0 is on your calculator. Now we need to type the first one, CFO. That means our first whatever we are investing or the outflow. Type 150 on your calculator. Then click plus or minus symbol. Why plus or minus? Because it's an outflow. We will take it as negative. Then click enter. Does it became minus 150 on calculator? Yes. Take your time. After typing 150. Then click plus or minus. It is given in the question. Look here. In the board also it's there. Plus or minus. Okay. Then click enter. That means it became minus 150. Correct? Yeah. Just help him also. CFO. Do you type 150? then click plus or minus, then click enter. That means it became minus 150. Yes. Does it become minus 150 now? Yes. Yes, perfect. Now, once you come down, there is CO1. CO1 is what we are taking it as the inflow which is coming for us. Okay. Inflow is nothing but for the first year it is 50,000. But we will not consider all the zeros. We will just put 50. Okay. Directly put 50. Anyway, the zeros will get cancelled. Type 50. Then click what? Enter. Okay. Yes. Now coming to the next year. Come down. Then F value is there. Check F01. F01 for the first year. How many year is there? Only 1 year is there, right? Yes. So I'll put 1 itself and click enter. Okay. That is 1 itself. Anyway, it's there. Then again move down. Then you are coming to CO2. Correct? CO2. There you will type 100 because for the second year, how much is the inflow? 100,000. Type 100. Then click what? Enter. Then what are you typing? Then come down, type 1, click enter. So F02 is also 1 year because 50 is becoming 100 or 50 to 100. How much is the gap? The 1 year gap is there. Then coming to the third year, last year, that is 40. Click enter. Okay. Type enter. Then move down and come click 1 and click enter. That means all the cash flows are entered in your calculator. Is all the values entered in your calculator now? Yes. Now, what are we finding? We are finding what? IRR. So, have you seen the IRR button? IRR. Click IRR button. Then click compute. Got the answer? Yes, that's your answer. Got it? 13 point something you got, right? Yes, perfect. That is the method we are going to follow. Now, I'll give you another question because it is interesting you give more and more question based on NPV. And I'll tell you the subject, this quantitative method will only become easy if you solve randomly of some question you need to solve. You should create your own question and start solving because all the buttons are there on your calculator itself. You can create your own question. I'll give you a question. Question, Mr. Nitin invested 20,000 on a burger company. Okay. Yes. Now, first year he got 10,000. Second year he received 20,000. Third year he received, how much you want? 15,000. Okay, 15,000. Find IRR. Can you get me the answer? What is the method? Method is very, very direct. First we will find since cash flow is involved, we will use our cash flow button. For the initial investment is how much? That 20,000. That is nothing but our outflow. Based on that, we will go about it. 10,000 is our first inflow, 20,000 is our second inflow, and 15,000 is our third inflow. Then finally, you will click enter everything you will do. And what are you going to do now? Finally, the thing is you will click compute IRR. Once you click compute IRR, click IRR button, then compute, you will get your answer. Everyone try. Get me the answer. Got it? Yes. Try. So tomorrow 9:30 to 1 we will have the class. Okay. Yes. Tomorrow we'll start off with time value of money and we'll finish the chapter. Okay. Everything we'll be doing in calculator itself. It'll be very easy for us. Try to bring calculator tomorrow. Okay. If not, you tell me also in prior. I'll try to arrange something if possible. Okay. Yes. If possible, I'm not telling yes itself directly because yeah. Then can I tell? So what is the cash outflow? CFO is how much? That is 20,000. If you want to type 20,000, type 20,000 itself. It's not a problem. Type 20 now. Okay, type 20. Then CO1 is how much? For the first year, how much is the inflow? 10. CO2, how much is it? That is nothing but 20. CO3, how much is it? 15. Now, finally, what is the method we are going to follow? Take your calculator. On calculator, you will click which button? CF button. Click which button? CF button. CF button you are going to click. Then once you click CF, anyway, the past memory is there. So we need to clear it. How to clear? Click second button. Then click what? Clear work. Click CE bar C button. That means we are clearing the button. I mean clearing the memory in the calculator. Now we are going to enter. CFO is how much? That is 20. Type 20. Then click which button? Enter button. Okay. Click enter. Okay. 20. Then click enter. Now you come down. See. If required, you can click minus. Yeah, better. Otherwise, our entire thing will change. Maybe. Yes. Otherwise, you'll get the answer in the other way. Yes. So you click plus or minus. Then click enter. Correct. Perfect. Then CO1. CO1. CO1 is how much? 10. Type 10. Then click what? Enter. Then come down. FO1 is anyway what? FO1 is anyway 1 given over there. So it's not a trouble for us. Let it be there itself. Then come down again. CO2. CO2 is how much in our question? That is 20. Then click what? Enter. Okay. Click enter. Type 20. Then click what? Enter. Then come down. FO2 is anyway 1 given. Then CO3 is what? CO3 or the inflow is how much for the third year? That is 15. Click what? Click enter. Click enter. Then what are we going to do? Click enter. Then come down. Anyway, FO3 is directly given. Now what are we computing? IRR. Click IRR button. Click what? IRR button directly. Then click what? Click which button? CPT button. CPT means what? Compute. So you will get the answer accordingly. How much are you getting? 50 something. Okay, fine. Better. Done. So cash flow. Just check the cash flow always. How much is the cash flow given in your question? Yes. Fine, people. Everyone understood this? The method is clear? Yes. Can I take you to the next question? Can I give a question based on net present value itself first? Okay. Next question. Everyone shake. Can I give you the next question? Inflow. Or I will say NRK company invested 30,000 in food business. Okay, food business. Then rate of interest is 13%. Let it be like 13%. The rate of interest is also given, that is 13%. Then we are going to say that first year he got or they got an income of 10,000 rupees. Second year it is 25,000. Then third year it is 15,000. Okay, get me the value of, find net present value. Try. Okay, find net present value. Look at the buttons on your calculator. Everyone try to get me the answer. Okay, try using your buttons in the calculator. Okay, fine. I'll give you 1 minute, then I will do it along with you. I'll tell you how to do it. So NPV button is already there on your calculator. Okay, once you click NPV, some interest rate will pop up. Type the interest rate over there, then directly you can get the answer. After that, you can compute NPV. Yes, got it. Clear work. You should use one question. First question, is cash flow involved? Is cash flow involved? Yes, cash flow is involved. Correct? Cash flow means money we are investing, then money we are getting. All the things should be considered. That is very, very important. Okay, then only we can compute NPV. Naren, what do you think? Which button we will click in order to find NPV? NPV button. Yes, perfect. Yes. So it's very easy. It's all about knowing your calculator. If you know the calculator itself, we can solve a lot of questions. All the questions. Literally all the questions. Yes. So cash flow is also involved. That should be also be considered. Got it? Perfect. Easy, right? What do you think? Easy, right? Yes. First one. 30,000 I invested. Okay. My company invested how much? 30,000. 30,000 means cash outflow is how much? I'll type it as 30. Let it be 30. Okay. Then cash flow for the first year is how much now? That is taken as 1,000. So I'll take it as how much? 1. Instead of 1,000, I'll put what? 1. Then cash outflow for the second year is how much? I'll take it as 25. Then cash outflow for the third year, I'll take it as how much? 15. Everything is given. Okay. Time period in between them is how much? 1 itself, right? So everything is fine. Now, my next question is to you guys. How to compute NPV? So, click which button? Click NPV button. Once you click NPV button, something else pop up. I value. What is this I? Interest. Interest is already given in the question. How much is it? 13%. Click. So, type 13. Then click what? Enter. Okay, once you click type 13 and once you click enter, that means 13 is the interest rate saved in our calculator. Now once you click the down arrow, click the down arrow. Have you seen the NPV over there? Once you click down arrow, NPV is right in front of you. Click compute CPT button. You will get the answer. Understood? Got it? Yes, very easy. Got it now? Yes, how much you got? So from initial, I'll tell you how to do it in calculator. So clear everything, clear the work, then click CF button. So how much is the initial outflow of 30? Then click what? Plus or minus, because it's the outflow, we'll take it as negative. Then click what? Enter. Then come down. CO1. CO1 is how much? 1. Type 1. Then click what? Enter. Then come down. FO1 is how much? How much is the period? 1 period. Correct. So you will type 1 itself and click enter. Then come down. CO2 is how much? That is 25. You will click enter. Then CO3 is how much? That is how much? 15. You will click enter. Then FO3 is already given. That is given as 1. Now we are going to click what? NPV button. In NPV button, how much is the percentage? 13. So type 13 over there. Then click what? Enter. Then come down. You are seeing NPV, which is equal to 0. Click compute button. You will get the NPV. How much is the NPV everyone is getting? How much is the NPV you are getting now? Yeah. Try. Take your time. Yes, I'll not rush you with this because I know that. Yeah, it's a mathematics. So it is there. Sheikh, you got the answer, Sheikh? Understood the method? How to calculate NPV? If not, please ask, okay? I'll explain it again. 8593. Yes, 8593. Correct? Yes, perfect. Sheikh, you got it? Are you there, Sheikh? Abu? So what are the steps? On calculator. No, please explain. Perfect. So on calculator, the first step, clear everything. On calculator, I'll write. From initially, I'll write. So we are computing what? NPV value. On calculator, on Texas, I'll write PA2 plus. We are going to do what? Click CF button. Click what? CF button. Once you click CF button, you will see that many values are already written there. So you will click what? Click second button. Then click what? Clear work. Click CE bar C. Why are we doing this now? We want to clear whatever value is already saved in the calculator. We are just clearing that off. Then Once you cleared it, we need to write the outflow. Outflow is how much? 30,000. So CFO, that is the first thing, which is once you click CF, everything is there, CFO, right? CFO button is right in front of you. Yes, this is given as 0. Since it is 0, we need to find the value. What is our real outflow? Real outflow is how much? 30,000. So type 30, then click what? Plus or minus. Why plus or minus? Because it is taken as outflow, we will take it as negative. Then click what? Click enter button. Yes. Once that is done, we are moving down. Click downward arrow. Okay, in downward arrow there is which one is there? CO1 is there. If CO1 is there, that means cash outflow for the first year. Cash outflow for the first year is how much? We will type 1, because 1000 we will not put all the zeros. If you want, you can put that also, you'll get the right answer. Anyway, type 1. Then since it is inflow, we will take it as positive. Then click what? Click enter. Okay, once you click enter there, that means CO1 is equal to 1. Then FO1 is anyway 1. Okay, so you can move down, go to CO2. CO2 is how much? CO2 is nothing but, one second, CO2 is nothing but given as 25, right? Or 15. CO2 is, second year it is 25. Type 25, then click what? Click enter. Okay, then come down again. FO2 is anyway 1. Then CO3 is how much? CO3 is nothing but 15. Type 15, then click what? Click enter. Okay, so once you click enter, that means CO2 is 25, CO2 is 25, then click enter, come down, CO3 is what? 15, then click enter. So till all the values are added, now what are we going to find? We are going to find our NPV, right? Click NPV button. After this, we are clicking NPV button. Then they are asking for I. I is how much in our question? I is nothing but how much percentage is given? 13. So type 13 over there. Then click what? Enter. 13. Click enter. Now come down. Their NPV is asked. So NPV is equal to 0 is given. So click which button? CPT button. Click CPT button. You will get the answer accordingly. Got it? Understood? Understood the method, Sheikh? Is this clear? If not, please tell me. I'll help you out. Yes, perfect. Done. Now, till here, everything is fine with NPV and all. Now, we will do more questions based on NPV towards the end. What if they are telling for the first year it is 50. Next 2 years it is 60. Then you, instead of F01, F02 is there, right? Every time we kept 1 because of the reason every year the common difference between the years is always 1. What if it is 2 years? We will put what? 2 over there. What if it is 5-year gap? Put 5 over there. Then easily you will get the question. Okay, that way we will solve more question towards the end. Okay, now I'll finish the portion. That is more important. Then we will solve more questions. Now, definition of money weighted. We already discussed about it. Now coming to the time weighted rate of return. Make a note of it. Time weighted rate of return. Time weighted rate of return. So in time weighted rate of return, it measures compound growth rate or the rate at which $1 grows over specified period. What is the basic meaning? We will just take $1 as the base, and we are going to find how much this $1 grows over the period of time. That is the basic thing in what? In time weighted rate of return. Make a note of it. Very important. So which one of the following rate depends on the growth of $1 over a specified period of time? We will discuss about what? Time weighted. Anyway, it is given. Specified period is given over there. That means we are discussing what? Time weighted rate of return. Now, how to find time weighted rate of return is very easy. Okay. The easiest part is, first we will consider the sub periods. For example, it is semi-annual compounded. Semi-annual compounded means what? How many compounding is there? Yeah, semi-annual means in an year there will be two compounding. Okay, that means 2 times the compounding effect happened. So we will find how many periods are there in total. For example, I am telling semi-annual compounding for 2 years. That means how many periods are there in total? 2 years are there in total. In each year, it is divided into 2 parts. So in total, how many parts are there? 1, 2, 3, 4 parts are there. Okay, that is the importance of what? So this time weighted, we are going to check the sub periods also. Okay, now calculate HPR. Do you know how to find HPR? Yesterday we studied, right? But the funniest part is any questions based on this, they will directly give HPR. Directly HPR value will be provided. Okay, HPR value is provided. If not, we will use our HPR formula in order to calculate the value of HPR. Now, after finding HPR, it is much more easier. We will link the entire sub period. We will just take the product of everything. But usually people make an important note. Usually we will take the geometric mean. Okay, so yesterday I told you whenever percentage is involved, what is the best method? If it is directly given in percentage, we will always take the geometric mean. Then you are getting your total time weighted return. Make a note. Steps. Step 1, understand the sub periods. How many sub periods are there? You form the sub period. That is the step 1 in finding time weighted return. So understanding the sub period is the first key condition. Second condition is calculating HPR. Usually or in most of the question HPR will be given directly. Then coming to the next part, we will find the final value or link the sub period. Link the sub period means usually we will take the geometric mean of it, but in our book and all it is not given in geometric mean sense, but usually we should take the geometric mean. Why we are taking the geometric mean of it? Geometric mean, whenever percentage is involved, which is the best method to compute the geometric mean is the best method to compute our answer. Okay, yes, done. Can I take you to the next part? Can I take you or give a question based on this? Yes. Make a note of it. Make a note of it. Take your time. Make a note. Sheikh, make a note of it. Then I'll give you the first question. Yes. How is everything going there in work and all? Tension is there, ah? Is it? Okay.
Hours are a bit long. You have to stretch it.
How long you will sit there, da?
10-11 hours.
10-11 hours. Oh, okay.
Hours has become very common now.
Common for you, okay.
One day I had
Lunch break and all is there? Yes.
One day I had to log in like for 15 hours and 30 minutes. That's it online.
15 hours. Online or offline? Online only, yeah?
That day I was
15.
working from home.
Oh,
15 hours.
actually working from home is always complicated, right? So that is too much also. Yes, fine. Anyway, the world is changing, right? Yes. Fine. Fine. Yes. If you study for 15 hours and all, it's crazy. Yes. Fine. I'll give you the first question. Question is, consider an investment where the cash flow at the start and or end of every quarter. Okay, what are we considering here? Quarter. That means how many period in an year? 4 periods will be there. 4 compounding will happen every year. Okay, now here each quarter is considered as what? Is considered as a sub period. So I am not mentioning that part. Anyway, you are aware about it. Correct now? Sub period is, each quarter is considered as a sub period. The return for each sub period is shown below. Okay, the return for each sub period is shown in the below diagram. So I'll just show you that also. Okay, so this is the entire timeline. 0, 1, then 2 is there, then 3 is there, then 4 is there, then 5 is there, then 6 is there, then 7 is there, then finally 8th sub period is there. For the first sub period it is 10%, second it is minus 5%, third it is I'll mention with on top 10%, minus 5%, then 15%, then minus 10%, then what else there are, then minus 20%, then plus 30%, then 20%, then finally 0%. Now we need to get the answer for what we are finally finding the time weighted return we are going to find. Okay, so everything is given. Try to get your answer from, try to get me your answer, then I'll write for you. Okay, everyone try. Everyone try. So we can split and get the answer very faster. For the first year, you can easily get HPR because specific time period, everything is given. So for HPR for the first year will be how much da? 1 plus 10% into 1 minus 1 minus 5% into 1 plus 15% into 1 minus 10%, right? It is given as minus 10%. So multiply it and get me the return for the first year. Then HPR for the second year will be how much da? That is nothing but 1 minus, from here you should start, second year starts here, 1 minus 20% into 1 plus 30% into 1 plus 20% into, finally what is there, the 1 plus 0%. So you will get the second year also. So you will get the link for first 2 years. Now we are finding the annualized return by taking the geometric mean. You can directly go ahead and get me the return. Very easy. Okay, people try, then I'll do it. And the timer starts now. Yeah, I'll give you 1.5 minutes. Try. PR is also properly given. Just we need to find or summarize all the values together and get the return form. Okay. "30 seconds more. I want the analyzed time weighted return. I want. That is the question. Done. Time. Now you tell me for the first year, how much is the effective rate? If you ask me, not the effective rate, if you ask me how much is the return for the first year, that means first quarter it is 10%. So I'll say that it is equal to what? 1 plus 10% into 1 minus 5% into 1 plus 15% into 1 minus 10%. That is nothing but 1 plus 10% is 1.1 into 1.1 minus 5% is how much? 0.95 into 1.15 into 0.9. Take the calculator, get me the answer. How much is that value? 1.081 something you got? Try. Take your calculator, try. People, please try. Clear everything. Turn on. 1.1 into 0.95 into 1.15 into 0.9, which is equal to how much? How much you got?
1.08.
1.08, which is equal to 1.0816 something you got. Yes. Now second year you tell me. Second year, it is 2, which is equal to how much? Second year is equal to how much? Second year we are finding the value of 1 plus HPR. If you ask me, effectively we are finding that. For second year we should start from 1 minus 20% into 1 plus 30% into 1 plus 20% into 1 plus 0. Get me the answer for that. That is nothing but 0.8 into 1.3 into 0.8, 1.2 into 1. How much is the answer for that? 1.2430. Yes, 1.2480. 8. Let it be 8. Now till here we got first year, second year. Now we are going to find our time weighted rate of return. People always, whenever time weighted rate of return we are finding, we will find geometric mean or we will find arithmetic mean. What is the thing? We will always go for geometric mean for return. So this is how much the first year it is 1.0816 multiplied with 1.248. The entire thing raised to how much is it? 1 by 2 minus 1. Why are we reducing the minus 1? Because we already added the plus 1. We are finding with respect to the percentage. Now tell me the answer, people. Get me the answer. Clear everything? Clear everything. Type the value 1.0816 into what? 1.248. Click equal to. Then click what? Root minus 1. How much is the answer? 16 percentage or 0.16 you are getting. That is how much percentage? 16 percentage. Sheikh, you got the answer? Yes or no? Are you doing it? Please tell me. Got it?
But why are we not taking it together as power 1 by 8?
So the thing is, if we take it like that, the thing is in time weighted return, we are considering the sum. First of all, we are splitting the sub period. Yes, we first split the sub period, then we are linking it. That is the third step. What is given? Where is it? Where is it? 1 second. So we are linking the sub periods together, and effectively we are only finding for what? First year and second year together. If you try 1 by 8, in certain questions you will not get the answer. When we change, then we should change the entire thing. Like the percentage also we should change accordingly. It should be like which compounding then? We should consider quarterly compounding. Many things we should consider and go about it. Okay. Now here we are only just considering the time weighted return part of it. Just the time we are considering. Yes. Yes, sir.
So it is getting annually compounded in this question.
Yes, we are taking with respect to annualization. That's why we in this question we are talking with respect to annualized. That was the thing I asked. Okay. Yes. Now going to the next part. Since you asked that, we'll go for the annualized and compounding part of it. Before that, one more question. Have a look at it. Everyone try. The timer starts now. Timer starts now. You can take 1 minute, more than enough. And Annualized is using money weighted rate of return to assess the performance of his portfolio. So when are we considering all this money weighted return and time weighted return? We are linking it to our portfolio, investment portfolio. Specifically, she wants to determine the following. The rate earned on money is invested, comparison of rate between her portfolio and other or similar portfolios, rate comparison between different investment opportunities. What all things she can compare using money weighted return. What did we find in our money weighted return? We just found our effective return rate. The return rate only we found. So what can be the answer? What all things we can find using this? Can all this be found? Is comparison made in this? No. We only find what? The return earned on the money invested. So what is that? The analyze selected measure will measure and assess the above mentioned objective. Which all above mentioned objective? Only the first one. So you remember we found IRR value. We will find the percentage, how much we are getting. That's all. Nothing more than that. Okay, comparison is not there. We are finding whatever we are having with. Okay. Yes. Next one is annualized return. Annualized return. So we did a question previously, right? We just did a time weighted return. Now we converted everything into our annual compounding way. We will converted everything. So what do you mean by annualized return? Interest rates and market returns are usually stated as annual return regardless of their actual holding power period. What is the reason for that? Anyone can tell me that? Why are we usually expressing everything in annualized return format? Any reason for that? So people, it's always better if you know because everyone will calculate things on a 1 year basis. Even though we say that compounding, multi-year, semi-annual compounding, then monthly compounding, yearly compounding, maybe minute by minute compounding, all the things, even if we are saying about that, but we always want to know how much we are going to earn in an year, or how much return we will get in an year. So usually we will convert everything into what the annually compounding manner, or we will convert everything into our annualized way. Now, first one, for annualized return, we have a formula with respect to HPR, and it is very important. Okay, very, very important. I'll give you multiple formulas with the help of this itself. If an HPR is earned over a specified number of days, the annualized return is nothing but 1 plus HPR, the whole raised to 365 divided by days minus 1. Why 365 over here? Because whenever it is given in days, we will take 365 as the benchmark, right? In an year, how many days are there? 365 days are there in a non-leap year. Then, what if the question is based on year? Sorry, months. Equation would have been annualized return with respect to months. It would have been 1 plus HPR, the whole raised to what? How many months are in total are there? 12 divided by months minus 1. What if it is weeks? Based on weeks, week basis, which is equal to 1 plus HPR. In total, how many weeks are there in a year? 52. How do you know that 52? You will take 365 divided by 7. You will get the numerator value is how much? 52 something you will get. So you will take it like 52 divided by weeks minus 1. What if it is given in days? We will use the first formula. Months, we will use the second formula. What if it is in weeks? We will use the third formula. Are you getting this, people? Anyone is having any doubt, you can ask me now. Understood? Got it? Can I give you one question? Everyone? First question, can I give you? Yes. Are you trying something? Then you will do that after that. Is done or not? How much time you want? 1 minute? No, fine. Can I go ahead? Okay. First question, everyone, based on this. You want water?
No, sir.
Yes. First question. Done. Question. So 3 things are given. Okay. Randomly say 1, 2, 3. And the time is also given. Okay. Time from the start, or since inspection, I can take it as 146 days is there. Then 5 weeks I am taking. Then 15 months I am taking. Okay, all these things are there. Then returns since start. Okay, I'm going to take it like for 156 days. I'll keep it like 4.61 percentage, then 1.10 percentage, then 14.35 percentage. Find annualized returns. Get me the answer. Okay, for each cases you should find the annualized return. Yes. Here HPR for the first case is how much? 4.61 percentage. For the second case is 1.10 percentage. Third case is how much? 14.35 percentage. So based on that, you try to get me the answer for all the cases. Day is there, week is there, month is there. Consider all of this and get me the values. Let it be some fund. Okay, randomly some fund. I'll give you 1 minute. So use the formula. What formula? 1 plus HPR, the whole raised to. In 4 days, how will you find? 365 divided by 146. Then for weeks, how will you find? 365, sorry, how many weeks are there? 52 weeks divided by how much? 52 weeks divided by 5 weeks over here. For months, it is how much? In total, there are 12 months. So 12 divided by 15. Accordingly, you should do. Okay. I'll give you 1 minute. You have 45 seconds more. You can download one calculator. In similar calculator you can download, okay, similar features, but all the features won't be there. Try to first case, second case and third case. First case 146 days. So accordingly, individually you should find the values. Can I try? First case 1 plus case 1. Case 1. 1 plus HPR, the whole raised to how much? 365 divided by 146. Then get me the answer for this direct question. Then since we are adding the 1, we should reduce also what? We should also reduce minus 1. Get me the answer. 1 plus HPR. It will become 1 point how much? 046. 1 point how much? 0461. The whole power 365 divided by 146. How will you do this on calculator? Minus 1. So type, clear everything on calculator, then type 1.0461 on your calculator. Then you will raise it to the power. Power is how much now? You will click y raised to x. So type what? Type 1.0461. Then click what? Y raised to x. That means we are taking the power. Correct. Now once after clicking y raised to x, you need to find 365 divided by 146. So put the bracket, then click 365, then divide with what? Divide with 146. Then close the bracket. Okay. 365 divided by 146. Then close the bracket. Close the bracket, then click equal to, that means now you are getting 1.11926521 on your calculator. From that I need to reduce this minus 1, right? So type or click what? Minus, then click what? 1. Okay, you will get the answer. How much is the answer you are getting? How much is the answer? 11.93%. Yes, which is equal to how much? 11.92 etc percentage. Everyone got the answer? Sheikh, you got the answer for the first case, annualized return for the first case. Understood the method? Yes or no? Please tell me up or down. Yeah. So next one, case 2. Case 2 is what? Case 2. The question is what? We need to find with respect to weeks. 1 plus HPR, the entire thing raised to, how many weeks are there? 52 divided by 5, which is equal to how much? Sorry, minus 1 also you should do, which is equal to how much? 1.0110, the whole power how much? 52 by 5 minus 1. Take your calculator and please get me the answer. Annualized return is how much is the question. So clear everything. Type 1.0110, then click y raised to x. So type 1.0110 on your calculator. Click what? Click y raised to x button. Click y raised to x button. Then what are we going to do? Type, put the bracket, then type 52, then divide with 5, then close the bracket. After that you will do what? Click equal to, then minus 1. How much are you getting? 1.011, the entire thing raised to bracket of 52 divided by what? 5, then close the bracket, then click what? Then click equal to, then click minus 1. How much are you getting? 12.05%. How much are you getting? 12.05. We will get in decimal, but we should convert it into rate percentage with multiplying with 100. So we got the second case also. Now we can find the third case. Case 3, how will you find? It's with respect to months. 1 plus HPR, the whole power. How many months are there of here? In total 12 are there. Then type divide by 15, which is equal to how much? HPR in this case is 14.35. That means 1.1435. The entire thing raised to 12 by 15 minus 1. Get me the answer. Direct question. Clear everything? and type 1.1435 on your calculator. Then click which button? Click y raised to x button. Once you click y raised to x button, click what? Put the bracket 12 divided by 15. Then close the bracket. Then click what? Equal to -1. How much are you getting for that? We will check. So clear everything. 1.1435. Then click y raised to x. Then click put the bracket 12 divided by how much? 15. Then close the bracket. Then click equal to. Then -1. How much are you getting? Is it 11.32? Yes, which is equal to 11.32 percentage. Understood. So we understood the basics, or this is the worst case also. This is how they ask the question. So we understood how questions can be solved based on our annualized return. So basically, whenever you get a question, will you convert it into monthly compounding and all? No, we will usually try to get it in what? In annualized format itself. Okay, next one. Get me the answer for this. The timer starts now. I'll give you 1.5 minutes. Janet and Adamson has 2 portfolio managers serving Hermes investment. Janet's portfolio return for the last 120 days is 6.8%, while Adamson's portfolio return for the last 18 months is 16%. Get me the answer. Very easy question. Find the annualized return. Then the question is, we need to find the difference or higher. How much is the difference, or how much this person's portfolio is higher than Janet or lower than Janet? That is the question. Try. Time up. Got the answer? So first case, we will consider Janet. Janet is there. Janet, what is happening now? Janet's portfolio return for the last 120 days is 6.5%. So Janet's annualized return is how much? Annualized return is equal to how much? 1 plus HPR, the holding period rate, the entire thing raised to, it is given in dates. That means 365 divided by how many days? 120 days minus 1. That is nothing but 1.068, the whole power 365 divided by 120 minus 1. Take your calculator and do this on calculator. How to do it on calculator? Type 1.068. Then click which button? Click y raised to x button. Then what are we going to do? Put the bracket 365 divided by 120. Then click equal to -1. How much are you getting? How much are you getting? 1.068. Click y raised to x. Put the bracket 365 divided by 120. Then close the bracket. Then click equal to. Then -1. How much is the answer? 22 point something you are getting? Yes. How much is it? 22.153%. Let it be like that. That is Janet's. Okay, Janet's. Then we will find whom? Adamson's. Adamson's, how will you find? Same method. Adamson's method is nothing but 1 point, how much? 1/6, the entire thing raised to how many months? 12 divided by 18 minus 1. Take me the value, or give me the value in calculator. 1.16. Click y raised to x. Then put the bracket 12 divided by what? 18. Then close the bracket. Then click what? Equal to. Then -1, which is equal to how much? Some value you are getting. How much is the value you are getting? 10.40 something you are getting percentage. Now take the difference between both. That is nothing but 22.153, which is coming to be how much? 11.7%, lower than the annualized return of Janet's portfolio. Sheikh, you got it? So how much is the difference between them? Difference is equal to 22.153 minus 10.40, which is nothing but 11.7 approximately. So option B is your answer. Understood the method? So this is the last type of question from this chapter. Okay, after this, whatever we are going to learn will be used in the next chapter. I mean, we will use the concept in the next chapter because we already solved questions like this. We have solved questions based on present value, future value, and all right previously. Yes, but we will solve more questions. Now, one more thing I want to ask. That is regarding the, because this type of present value and periodic compounding part and all we will discuss in time value of money. Okay, next chapter. Before that, I want you to understand something called as continuous compounding. What do you mean by continuous compounding? Any idea? What do you mean by continuous compounding? Continuous compounding. So, monthly compounding means compounding every month. Yearly compounding means compounding every year. Quarterly compounding means compounding every quarter. Then weekly compounding means what? Compounding every week. Then what will be continuous compounding? Any answers? Very easy answers. Continuous compounding means compounding every second. So if I am sitting here, my money is getting compounded randomly. If you just sit or if you do nothing, randomly I'm saying that way. Okay, if I just do nothing also, my money is getting compounded every second. We will say that, right? Oh, that person earned this much in this second. That is the value of his second. Likewise, we will say, right? Similarly to that, continuous compounding means it will get compounded infinitely small. Even if I say seconds, that is also wrong. If I say milliseconds, that is also wrong. It will go to the minute seconds with respect to time. That is continuous compounding. Now, we have a formula for solving question based on continuous compounding. Yes. The basic one, I'll take you 1 second. Yeah, you can make a note of it. Rate percentage of continuous compounding is nothing but log of or natural logarithm of 1 plus HPR, or we can write it as ending period value divided by beginning period value. We will solve 2 questions based on both the cases. Okay, make a note of it. Continuous compounding return. RCC is what? Continuous compounding return. Ending value means what is the ending value they are implying? That is the ending price. Then beginning value means the price at which we purchased it. Okay, yes. So everyone know how to use log value in calculator. We will just talk about that also before discussing questions based on this. First, so ln means what? Ln means natural logarithm. Okay, natural logarithm. What is the basic meaning of a logarithm? Basic meaning of a logarithm means how many times a number should be multiplied in order to get a value. If I say 64, okay, if I take log of 64 to the base 8, answer will be what? 2. Okay, the base is 8 and then 8 should be multiplied how many times? 8 into 8 is how much? 64. That is the basic meaning of logarithm. Okay, then when I say natural logarithm, the base is what? E, exponent, E value. E value is how much now? E is equal to 2.71 etc. 8. That will be the value of E, but we will call it as E itself because we have the value in our calculator. So log of 50 or natural logarithm. So people, whenever the base is E, okay, whenever the base is E, we will represent it using ln. That is natural logarithm or log to the base E of 50. How will you calculate in calculator? Take your calculator. Yes, turn on it, clear everything on your calculator, type 50 first, then click which button? Have you seen one ln button over here? Ln button is visible to you. Click that ln button. Once you click the ln button, you will get the answer 3.9120 something you are getting. Okay, so how to find log in calculator? Type the number. Whatever number is there, type that value, then click ln value. For example, if you find randomly, you find 2.7 clear something, log of 2.718, then click ln, you will get around 0.99999. correct? So if you take log of ln of 2.7183 etc., you typed 2.7183, then click log, you are getting how much? 1.000. That means E value is how much? E value is 2.7 something. So when E should be multiplied, how many times do you get this? Only one time E should be there. That is the basic meaning of logarithm. So in order to find logarithm, type 50 on calculator, then click what? Click LN button. LN button is for what? Finding the log value. Okay. Now, why are we considering logarithm over here? Till now we have not considered. In monthly compounding we have not considered. In quarterly we have not considered. In annual we have not considered. But why? Why in continuous we are considering exponent? So exponent means what? Which is growing like this. The graph will always be like, we will say that my graph went exponentially high. Exponentially high means in a second itself I am going high. That's why rate of return in continuous compounding we are using exponents to find the answer. So first question, make a note of this question, people. If the 1 week HPR is 6%, then equivalent continuous return is how much? Okay, if 1 week holding period return is 6%, then equivalent continuous return is kitna is the question. How to get the answer, people? HPR was already given. Yes, Narayan, HPR is already given, right? So what will you do? 1 plus 6%. 1 plus 6% is nothing but log of, which is equal to RCC is equal to log of 1 plus 6% can be written as 0.06. So log of how much? Log of 1.06. So how will you find it on calculator? Type this value first. Type 1.06 on your calculator. Then click what? Click LN button. You are getting your answer. Take the calculator. Type 1.06. Then click what? LN button. You are getting how much is the answer? Which is equal to 0.058. That means it is 5.8%. Okay. Understood. Now the next question with respect to this itself, I'll give you. Make a note of the question. Yes. Sheikh, you got it? Previous one you understood? Got it? Got it? Yes, perfect. Now the next question. Nitin purchased a stock at $90. Okay, Nitin purchased a stock at what dollars? $90. Okay. One period later, the stock has a value of 152.7. Okay. The continuous compounded return over the period is how much? Period is dash. I'll put a dash, that is better. Yes, get me the answer. So Nitin purchased a stock at $90 on a period later. Okay. The stock has a value now, a value of how much now? 1 period later. Okay, 1 period later, the stock has a value of 152.7. The continuous compounded return over the period is how much? Okay. How will you find? Which formula we will use? We will use the formula of what? Second formula. RCC is equal to what? RCC is equal to log of what? Ending value divided by what? beginning value. Okay, make a note of it. Ending value divided by beginning value. Ending value is how much? Log of 152.7 divided by beginning value. How much did I purchase it for? $90. So 152.7 divided by 90, then click equal to, then click log. You are getting your answer. The answer will be right in front of you. Type 152. Okay, take your calculator, type 152.7, then divide with 90, then click what? Click equal to, then click what? Click LN. You are getting your answer. LN means capital LN button. Okay, yes, get me the answer. 152.7 divide with 90, then click equal to, then click LN. How much is the answer? 0.34 something you are getting.
0.524. 52.8.
Okay, let me check. Somewhere I went wrong there. 152.7 divide with what? 90. Then click equal to. Okay, got it. Then click LN. 52. Correct? It's coming to be 52.86. Everyone got it? 52.86 percentage. Shake, you got it? Everyone understood this? So that is your continuous compounding. Now we are talking about something called as price relative. Price relative, I told you in the beginning of the session when we started off. Price relative is nothing but beginning period price is there, the ending period price will be given in the question. Then price relative is nothing but price of the ending period divided by price of the beginning period. That is price relative. Ending value divided by beginning value. So if you look here, so RCC is nothing but log of price relative, the ending value divided by the beginning value. Next one. Next one is called as types of investment return. It is actually more theoretical than problems. Okay, so we have gross return and net return. What do you think? What is a gross return? Gross return is nothing but total return before deducting management fees, administrative fees, or whatever fees is there. That is called as what? Gross return. While net return is what? The return after deducting. So two types of return. Gross is there, then net is there. First one, gross is what? Without deduction. Net is what? With deduction. That is the basic thing. Now, pre-tax and after-tax nominal return. What do you mean by that? Pre-tax. Pre itself is meaning what? The return before taxes are paid. Then after-tax return means what? The after-tax is after the tax liability is deducted or the tax is deducted, how much is the return? So that is pre-tax and after-tax. Make a note of it. Everyone, I think with the name itself you will understand what is given. Then real return, we already studied this real rate of return, right? Long back. Yes, we have studied this long back. We solved some question also using this. So I'm just not going back to that because we are considering inflation also in this. Okay. Now the final one, leverage return. So what all things we discussed? Gross return we discussed. What do you mean by gross return? Everyone, what is gross return? Without deduction. Then net return is how much? With deduction. Then pre-tax deduction is how much? Before the tax, how much is the deduction? Then after tax deduction means what? The post deduction. Now coming to the fifth point, that is the leverage return. What do you mean by leverage return? Any idea leverage return? What is leverage return? Leverage return is the return that you got after using the borrowed money. So you will borrow some money and you will invest somewhere and you will get some return. So that type of return is called as what? Leverage return. And unleveraged return will be what? Whatever return you got using your own money. Okay. Leverage return means return you got, return you received, or return you earn. That is the best way. After using borrowed money to invest. That is the basic meaning of leveraged return. Then coming to unleveraged means what? The unleveraged return will be the right way. Unleveraged return is what? The return you received. Return you received using your own money. So that is leverage. Then the other one is unleveraged. You can make note of these formulas, but questions will not be there much. You can keep a note of it, not much important. Okay, that is your first chapter, people. Okay, what all things we learned? We learned about HPR. Then we learned the basic calculator tricks we have learned. Then we learned about what types of different types of return, real return we have studied, all the returns we have studied. Then we studied about arithmetic mean of return, then geometric mean of return, harmonic mean of return. All the things will be we studied. Then whenever percentage is involved, what type of return we will choose. Percentage is involved means we will always choose geometric mean. Okay, that is very important. Then we studied what all things we studied today. Money weighted return we studied, then time weighted return we studied. Then we studied about continuous compounding return. What do you mean by continuous compounding return? Continuous compounding return means what? Every minute or every second it is getting exponentially compounded. That is the basic meaning. Exponentially compounded. That also we studied. So these all things together constitute your first chapter. Okay, done. Can I conduct the test? Yes, I'll give you the. Everyone is there in the group, right? Yes, everyone is there in the group. Sheikh, you are also there in the WhatsApp group, right? I'll share the question paper. I will give you 10 minutes. So try to write the test. Anyway, questions, you will know the question. I just want you to get used to the test paper pattern. But 10 minutes is more than enough. You'll be able to solve within 5 minutes or 6 minutes. You can use this calculator. Okay. Yes. You can have it now. Everyone, the test question will be there in the group in 1 minute. Okay. I'll just share it.